be patient, be a good person.
Welcome to the Service to Syndication podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication podcast.
Hello, my servicemen and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlowe, and I am a U.S. Navy vet. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, investors, capital raisers in the world, where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindset, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me Mr. Cedric Williams II, who is a top-notch commercial real estate entrepreneur and investor. Well, but before I properly introduce our exciting guest to you, please do a favor. If you get some insight out of this interview, if you get some type of insight, mindset shift, if you learn a new skill, new information, receive inspiration or motivation to go out and take some action to make some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, or share it in your stories. Help us spread our message while you help others. And for all of you who shared this episode, I want to say thank you. Again, everyone, I have with me Mr. Cedric Williams II. He is a seasoned asset operations manager with a strong background in commercial real estate, capital raising, and investment analysis. He is a U.S. Naval Academy graduate and former Division I track and field captain. Cedric transitioned from military service to a career in real estate and finance, supporting a $500 million capital raise and underwriting over $20 billion in commercial real estate loans. He's the founder of Blue Magnet, where he mentors Naval Academy grads and develops career pipelines for elite talent, and also advises Vroombrick on growth strategy and investor outreach. Cedric began his real estate journey as an agent with Atlantic Sotheby's, contributing to over $16 million in sales. A Navy veteran with leadership experience aboard the USS Carter Hall, he now holds a Series 7 and 63 licenses and volunteers with the New York University track and field and veteran transition programs. All right, Cedric, first and foremost, thank you this morning for coming on board to provide my listeners with the wealth of knowledge that I know that you have with your extensive resume. The first thing that I always like to do is have my guests to give me their real estate journey in about 75 seconds or less, and we'll just start to unravel all of that.
Sounds good. Well, appreciate you for having me. You have a great name. So this should be a good podcast. So my real estate journey in 75 seconds or less. I was a naval officer in 2020, commissioned, and from there, about 2021, midway through 2021 is when me, a really good friend of mine, best friend, Cordell Williams, we started to get into real estate. Interest rates are really low. He had already bought a house. He's a couple years ahead of me. I'm graduating from the academy. He'd already bought a house. Interest rates were low, and we were like, man, we should get our real estate license so we can buy properties and like get paid to buy our own properties and house hack. And so me, him, and two other really good friends started a team at Atlantic Sotheby's, which is a really good real estate brokerage in the Hampton Roads area. And we crushed it for, I would say, almost just about a year. Like had the rookie of the year on that team, and yeah, we're just crushing it in that area. We all bought properties. We're learning how to manage properties and so forth. And as my career in the Navy was winding down, I started to get the desire to do this at a larger scale and own commercial real estate. And so I just started doing a bunch of research and looking into it. And that's when I learned what syndication was and what raising a fund was and all these things. And I knew, like, okay, either I want to go to grad school and try to transition into doing my own, like raising my own funds for my own syndications, or I want to go and work for a large company that is already doing it. And so I hit up my really good friend, Phil McConkey, who owns Academy Securities. He's the president at Academy Securities, started by four Naval Academy graduates. And I said, hey, man, is it cool if I come and intern at your shop in New York? And he was like, of course. So I came there for a month, or I went there for a month. And during that time was just doing grunt work, but more importantly, like asking a bunch of questions. And that led me to getting connected with Janie Mines, who then connected me with a partner at the firm that I'm currently with. And since then, I've been learning a ton every single day, from underwriting loans to talking with LPs, raising funds, and the whole gambit, really.
Okay. All right. So now, what inspired your path to the Naval Academy, and how did that experience shape your personal discipline and leadership style?
My journey, that's a great question. My journey to the Naval Academy was an interesting one. I'll say that it wasn't one where I was a kid who'd always dreamed about being in the Navy or always wanted to go to the Naval Academy. I didn't know what it was until my sophomore year of high school when I started getting recruited for track, because I played football and basketball my entire life. Sophomore year of high school was the first time that I ran track. And pretty much I have a cousin who I'm not super close with, but he graduated from the Naval Academy. And so I spoke with him. He liked it. He was like, yeah, you should look at it. I was like, all right. And my parents really wanted me to go because it's free and it's a really good school. And so I was like, okay. So we moved to Atlanta for my junior and senior years of high school. And during that time, I go to the Naval Academy Summer Seminar. And my parents are not, I didn't grow up with very strict parents. They're really good parents, but I feel like I'm a very headstrong person and like stay out of trouble. So there was no need for them to ever be strict. So when I went to summer seminar and like all of a sudden I can't look to my right or my left, or I'm like, we're being yelled at as much as they can yell at you in summer seminar. I was just like, whoa, like this is kind of weird. But at the same time, I thought it was more like a summer camp type of thing. I was like, there's no shot that the actual school is like this 24/7. So I came back to them and I was like, I don't really know about this school. But then once I went on my official visit for track, I would say that's when I really wanted to go, because I met some of my friends that are friends for life, and honestly, like I consider them family. While I was a drag, that's what we call the recruits drags at the academy. When I was a drag, I went on campus on Friday, went to a practice, left to DC, went to parties all weekend, and I'm not a partier, so I was like, all right, this is like kind of cool, but like I like these guys a lot, and the fact that they are bringing me with them is really cool. And they all had a good balance of like being extremely smart and also being really good athletes, but also know how to have fun. And that's something that I admired. So I was like, all right, I want to go to this school. Like it's pretty set in stone at this point. I had a great trip. I love the team, so I want to go to this school. And I would say that's the point that I wanted to go to the Naval Academy. Was the track team. So it wasn't really the military side of it, because I didn't grow up with a military background or anything like that.
Okay. All right. So being a Division I track and field captain and, of course, Hall of Fame inductee speaks volumes. Now, how did athletics contribute to your approach in high stakes business environments of today?
I would say athletics really gave me the opportunity to sharpen my switch and my team building skills. So what I mean by my switch is a lot of times in athletics, you don't actually hate your opponents, but at the same time, there's a necessary switch that you have to have that says, I'm winning at all costs. Like within reason, not literally like doing something to harm someone, but like in a friendly competition way. Like I'm going to beat you. I don't care that we're cool outside of this. Right now, you're in the way of me winning a medal or of my team scoring more points. So yeah, I'm beating you at all costs. And I think that that's a necessary thing that you have to have in business, both operating your own business and just working in the private sector as a whole. The examples, well, not specific examples, but some use cases would be, hey, I've known this guy sitting across the boardroom from me for 10 years. Maybe we were analysts together. Now he's at a different shop, I'm at a different shop. You have a responsibility to your investors to get the best deal possible so that they get the highest returns possible. And you have to have that switch and be bold enough to actually stand firm in your decisions and smart enough to know when to flip on the switch and flip off the switch so that you can also like maintain your relationships and not burn bridges and go too far on something. So I think sports did a really good job of subtly teaching me that. And then also on the team building front, especially with track and field, there's some sports that have small teams, but especially with track and field where you typically have larger teams, not everyone gets along. And being a captain and managing different personalities and different things that happen on the team. I do this just in my personal life as well as my professional life, but just being a person that everyone feels comfortable with going to, and that you feel comfortable not only giving constructive criticism to someone, but also giving praise to people. I feel like most times, or not most times, but a lot of times, it's easier for people, especially out of frustration, to give criticism to other people. But to actually like sit down and write a letter, I'm big on writing letters, sit down and write a letter to tell a person how much you appreciate them or the things that they're doing right, or like look them in the face to face and tell them like, hey, you did a really good job on this. That goes a really long way with people. And being a team captain or an event captain on the track team really was the first opportunity that I had to sort of exercise that and then see the results of it and how people responded.
Okay. Do you think that maybe your coach or teammates at the time saw that in you, and then that's how you were elected or selected to be the captain?
It's definitely possible. I think that to be a captain at the time when I was at the academy, you definitely, a prerequisite was being good at your craft and being responsible and being consistent. So I think that I had those three things. And it's funny because I really did learn this during that time, because when I first got there, I was a guy with the headphones on during warm-ups. I've always I grew up like an only child, even though I'm not an only child. My siblings are just much older. And so I was very used to being alone and just like to myself. And track is a team sport, but it can also be a very individual sport as well. And so just as my time of going through the academy and growing in my leadership at the academy, I was able to pick up a lot of those skills. So I wasn't ever told that that's why I was chosen. Looking back on it, I can definitely see the growth during my time at the academy leading up to it. So I would imagine that the coaches saw it at the time too.
Cool. All right. So you've served in leadership roles on ships and joint operations and now high finance. What was the transition like from military to commercial real estate and investment banking?
It was a tough transition. It's a tough process. I would say my transition was from a 10,000 foot view, one of the quote unquote easiest transitions, just because as soon as I got out of the Navy, I walked right into a job. But I would say, for one, I was gearing up to get out a year and a half to 2 years before I actually got out. So that gave me a nice runway to prepare. June or January of, 2023? Yeah, January of 2023, I wrote 100 names on my whiteboard, which is usually right behind me, but it's up in the front right now. But I wrote 100 names on my whiteboard of people that were doing what I thought I wanted to do. I didn't know what I wanted to do. I'm still a young guy, but doing what I thought I wanted to do. And I just went down the list, contacting them each day. Like literally when I got home from work, I was at a short command at the time. I would send a lot, like 5 to 10 emails or text messages or LinkedIn messages to people, and then manage those relationships and nurture those relationships and just be inquisitive, and then also try to provide value to those people, because during that time, meeting 100 people, I'm also building a network and putting together, like, I spoke to this person and maybe that person can help you. And that's one thing that I always wanted to do, was provide value to people. So I would say through that process, it was a lot of me traveling, a lot of getting stood up, people not willing to help, but it was also a lot of people willing to help, a lot of people meeting with me that really had nothing to gain from me, just out of the goodness of their heart. And that really helped me in the transition, because it gave me more insight as to what my options were and what they actually realistically looked like on a, I wouldn't say a day-to-day basis, but just as a career play basis. Like, if you take this route, this is kind of what you're looking at. If you take that route, this is kind of what you're looking at. And based on what you want to do in the next 5 to 10 years, my advice, being the person I'm talking to, would be to do X. Just compiling all of that information, that's how I landed on going straight into the workforce versus going to grad school. And thankfully, I was able to go into commercial real estate, which is what I was wanting to go into. But like I said at the beginning, I would have been very happy with going into investment banking or working at a bank, just to get my foot in the door in finance and learn how money works and how markets work, and how to raise capital, because I think that that's invaluable knowledge to anyone in any industry. Yeah.
Two things there. You prepared well before it was time for you to transition out the military. And when you did, you looked to add value to those that were in the marketplace, thereby allowing them to see your true value and would be willing to work with you or provide you a reference to someone where your value could be added to their corporation, company, organization. Yeah. And that's huge.
That's something that when I'm speaking with people, that I just remind them to do, not to necessarily be transactional. It's a fine line, but you don't ever want to ask too much of people, and especially when you don't really know them, that don't really have much to gain from you on the surface, without providing some sort of finding a balance in a tactful way to do that doesn't seem very transactional, like, hey, you scratch my back, I'll scratch yours, because that could turn some people off too. I think that's a really good.
Totally agree. So now, how do you apply your experience leading over 70 plus sailors and managing multi-million-dollar equipment to the world of capital markets and real estate, if you do?
Yeah, the honest answer is I don't really. I don't lead anyone right now. I was underwriting deals for 9 months, and now I assist the lead capital raisers with managing their relationships with potential investors, current investors, and just making decks. So my leadership skills, I would say communication is about the only skill that I use that I gathered and honed in while I was in the military. Yeah, it's finance can be, especially at the lower levels, like the analyst, associates, or senior associate level, even VP at some shops, you're not leading that many people. Like, it would be a while for me working in PE to where working at a company and not starting my own, perhaps. But typically, it would be a while before I was leading a group of 70 people. And even then, I'm leading a group of 70 people that are likely younger than me, less life experience than me. I think the Navy and other branches as well is really unique in that from day one, when you commission as an officer, you're leading people who are much older than you, who have a lot more life experience than you, who know more about your job than you do. And so that right there is a very humbling experience, but it also forces you to get outside of your comfort zone. It also forces you to not be afraid to ask for help. It also teaches you that, yeah, this hierarchy thing is here in place, but there is a lot that I can learn from you, just as there is a lot that you can learn from me. It's not just like information just flows down, it flows both ways. So in my communication, in the role that I have now, I like to think that I let information flow both ways, or try to give insight and flow both ways. At the same time, though, the people that are further along than me have a lot more experience than me, and they know a lot more about the markets than I do. But yeah, I would say communication is about the only thing at the current stage that I am in my career.
Okay. And trust me, that's enough. Being able to effectively communicate goes a long way. So What's a leadership lesson from your military service that you find yourself teaching or modeling in civilian life?
I would say the most important and something that's like become a pet peeve of mine if people disrespect this thing, but something that will make me love someone at the same time if they do respect it, is the art of being on time. In the military, I have instances where I was late for things, but when I got to the fleet, you then realize like, okay, this thing, we have to meet this deadline or we're not going to get underway, or we have to meet this deadline or we're not going to pass this inspection. We have to meet this deadline or we're not going to get this part in time for deployment. Like it's just, you have to be on time for things. You have to be to the meeting or the meeting is going to start and the captain's going to yell at you. Military scoldings in the military are a lot less PC than any sort of discipline that you can receive in corporate America that I've seen so far. Because I've seen some things in the military, as I'm sure that all of us have, that wouldn't fly in corporate America. There would be lawsuits galore. So those are scoldings that you definitely want to avoid at all costs, and will sort of wire you to get to every meeting at least 10 minutes early. So I would say someone being on time is a big thing, and more importantly, me. And not to say that I'm on time for every single thing, but when I am a minute late or a couple minutes late, I like to just apologize. Like, hey, I acknowledge that you've been here waiting for me, even if it's for a minute. I appreciate your time, and I don't want you to think that I'm taking it for granted. But yeah, just being on time for things, showing up when you say you're going to show up, and doing the things that you say you're going to do. If you do what you say you're going to do, a lot of the times you'll be successful, or you'll make good relationships, or have a good eval, or it just I see no bad that can come from doing what you say you're going to do and being where you say you're going to be when you said you're going to be there. And so I think that that's the biggest thing that I've taken from the military experience to the private sector, as far as like leadership and that goes. I use the on time thing all the time. I like to be as punctual as I can be.
Yeah. In that regard, you and I, we're kind of the same a little bit. Yeah. When a person does not show up on time, man, I'm telling you, that ticks me off more than anything. You say you're going to be here at this time, or you're going to call at this time, you're going to show up at this time. I expect for you to show up. However, a lot of times I'm late to things. I'm not gonna lie. I'm not the most punctual person. And and I just, kind of like you, I apologize. I'm like, sorry, got caught up in traffic. Probably there were no traffic. I just left home. That's me. That's me.
You say I'm on my way when you just rolling out of bed.
That's always. Yeah. I'm on my way. Like, all right, I'm still in the house getting dressed, but hey, we all have our faults, right?
Right.
So you've led the underwriting of over 20 billion in commercial real estate credit loans. What are the key variables you prioritize when assessing investment grade deals?
Yeah, I would say things off the top of the head would be the sponsor is one of the most important things of the deal. It's just like you going out to get a mortgage or a loan on any deal that you do. The company that's giving you the loan, they do their due diligence on you, the person, to gauge how responsible they deem you to be, how reliable, how they think that you're going to execute on the plan, what plan you have drawn up for the deal. And then they look at the plan as a whole, sort of removing you from it, and say, do we actually believe in this plan? Like, is this what we would do? Because if it's not, and we don't think this would give us the best ROI, then you can be the greatest sponsor in the world. We have differences here. We're probably not going to give you a loan because we don't think that it's going to actually work out. So I would say the sponsor is the number one thing. I would also say CapEx is another thing as well. I have experience underwriting bridge loans, and those are typically loans written for assets that are in some sort of transition. So say it's a newer asset, or someone just took over an asset and they're in the process of leasing up that asset. That's a very risky time period for an asset, because if they don't lease up, like your returns, like there's no money coming in, that property isn't generating the money that we've underwritten you guys to generate in 9-10 months. So I would say the capital expenditures as far as supplies that are needed to repair anything that has gone wrong at the property before, or if it's a fairly new property and still being built, the capex there, what is the employee load like? Like, is this property or project overstaffed? Is it understaffed? What does the economy look like? Real estate is sort of lags at times as far as like the markets could fluctuate by 1,000 basis points in a day. You wouldn't really see a building fluctuate that much in a day, but over time, like it'll catch up with it. And to that, that's because a lot of things, for example, tariffs, if there was a tariff on wood and you have to, or shingles, and you have to replace the roof on 10 of your properties, well, now it just became exponentially more expensive to replace your roofs. And that's eating into the cash flow. And now that property isn't as profitable as we underwrote it to be. So I would say capital expenditures and the sponsors are the two most important things when you're underwriting loans.
Now, for those who have not done a capital raise, walk us through the anatomy of a capital raise, especially like the $500 million fundraise you supported. What were the biggest lessons learned about investor psychology and communication? Because that's huge.
Yeah. I would say I'll start with communication. There's a balance of being consistent but not annoying, providing information but not too much information. You know, a lot of times during a capital raise, I make a lot of decks, which are like PowerPoints that the head capital raiser, like the partner, would go and give the presentation that he would give to investors. And it's sort of like, it's funny because in school, a lot of times,
we know you're gonna like this episode, so please like, comment, and subscribe to this channel so you can be notified when the next episode drops.
we had to meet a minimum requirement for like pages to write. And it's like, all right, I gotta have 1,000 words or whatever. So I have to stretch it out and put a bunch of fluff in there to get to 1,000 words. You'll find a lot of times in finance, people know that you're not gonna read that stuff, or it's like, you're not gonna read all of it. So we gotta get to the point very quickly and state our objectives and our plan very concisely and why you should go with us. So it's very challenging to write very little. Like if you saw the decks, you'd be like, oh, I mean, that's easy. But if you actually read and understand all the information that is being compacted into a sentence or two, and what we want the investor to feel or gain from that, it's quite hard. So I would say learning how to concisely communicate, learning how to consistently communicate, and learning how to communicate with people with vastly different backgrounds than you. You know, like if you're raising in Europe from a German, maybe, and not, I don't want to pick on like any particular country. Say you're raising from like country X. Country X might want someone pitching to them that is from country X, or my company will want to put someone in front of them that's from country X, because while we are talking about business, a lot of real estate, no matter what level you're doing it at, is about people. And so a lot of the times it's only so many different ways you can cut it up, a deal up, and make it attractive. Most of the time, if you're competitive on a deal, you and all the other people competing on that deal are within the same small little range. So whoever that investor is going to choose to invest with is going to come down to like, okay, we all have good options. Now, what more does this company bring? And I would say a large part of that communication is the being personable and building good relationships with these people. So a lot of the communication that we do is not only informing LPs on what funds we have to offer them, but also what events we have to offer them. Hey, we're holding a women's event for women in commercial real estate. Hey, we're holding this associates events for young associates in real estate. Hey, we want to take you out to dinner. We see that you're going to be in town for this thing, or hey, we're in town for this thing. Let's grab a coffee or something, just to maintain relationships, because so much of real estate is about relationships. So I would say that communication piece is key in capital raising. And then also another thing that's really important in capital raising is presentation. It's very nitpicky, and investment bankers can tell you this as well. when you're making decks and just presenting to people, it's sort of a thankless job in that no one's really going to care that this sentence has a period, but the following sentence doesn't have a period. But when someone notices it, if an LP sees that and they notice it, they're like, okay, this firm doesn't really pay attention to detail. Or if they're missing this small little detail, what else are they missing? So it's just like little subtle messages that you are giving to potential investors or partners on something that you have to look out for. So it's a very tedious process of reviewing materials that are being sent out. And even once the materials are sent out, sometimes it's like, man, we could have done this better. I've never used the same deck twice, even though the information might be the exact same. You never just hit send like, oh, we used this last time. It's always like, okay, let's see what we can do better with this. Let's see how the world around us has changed and how we can reposition this same information to make it hit home a little bit more in today's world versus yesteryear's world. So I think being in tune with the times and just being aware of the presentation of your materials is very important in the capital raising process. And then also on your question about investor psychology, I would say one of the most surprising things is that investors are of large institutions. A lot of times investors are very human. You know, you would think that large institutions are very like XYZ. This is exactly what we're going to do.
Exactly.
But you find out very quickly that they have emotion too. You know, for example, a lot is happening in the US right now. There are some investors that are refusing to come to the US or do deals in the US right now because of everything that's happening in the US, even if the deal on paper makes sense.
Okay.
So you oftentimes would think like, okay, this is an institutional investor. They're just going to do what they have to do to make money. That's sort of how before I got into the private sector, just looking at Wall Street from a distance, it's like those guys just do whatever they have to do to make a dime. And working with a lot of investors, people do care about shareholder value and maximizing it 1000%. That's the whole point of the job. But I would like to push back on that a little bit, because I've seen it a lot where people won't invest in something if they don't believe in it, and that's regardless of the deal being good. So yeah, we're seeing a lot of human elements from investors right now as the US is sort of going through ups and downs in the market and a lot of things in the political arena in the US. Some investors don't want to touch the US right now, which is very human of them, because the US is a great place to invest in. Just on paper, it's a great place to invest in. So yeah, investors are very human.
I mean, I can definitely agree with that, only because you're investing funds, even if it's institution, they're investing their funds or funds of their investors. And of course, the main rule in investment when you're dealing with investors, preserve investor capital. Whether they make money on it, it's great if they make money. If they don't make money, it's okay. But as long as they don't lose any of the invested capital. And right now, just with the political climate, not bringing politics into it, but people are unsure with the economy in the United States, where it's going to be. So I can definitely see why some people will be a little bit hesitant at the time, because you're just unsure. Uncertainty in the marketplace will hold people out of the market.
Right.
So yeah.
Yeah, 100%.
Yeah. And so given your experience across multifamily, industrial, hotel, mixed use, and new development, how do you assess which asset classes are most resilient in today's economic environment?
How do I assess that? I would say from my observation, essential real estate is never a bad option. And what I mean by essential real estate is like multifamily housing, grocery stores, things of that nature. It's something that investing in real estate that people will always need. You see during COVID, the result of COVID office at the bottom of the tier rankings when it comes to commercial real estate. And that's because it's not necessarily essential in today's environment. We all have computers. We're on Zoom right now. You can meet and collaborate with people virtually. But you did see during COVID, grocery stores are still open. You did see during COVID, people being in their homes even more. So you would argue that homes are more important at this time because you're spending more time at home. So it's things that it's kind of like selling oil right now with our current space in technology, or our current place with technology and oil being the dominant factor, how we fuel our vehicles. No matter what's going on, no matter how high oil prices go, you might have some strikes if they go crazy high. But at the same time, people need to get to and from places.
Yeah.
And with the major build out in America of suburbs, you are not walking from your suburb to your job in downtown, whatever. You know what I'm saying? Like you're gonna have to get from point A to point B some way, and more than likely that's gonna be a car that uses oil, or gasoline. So you're gonna have to. I mean, both honestly, but I'm talking about gas. You're gonna have to use it, so it's essential, and
Yeah.
that's a good business to be in, because no matter what's happening, people are going to be buying. And so I would say that's where I would start, as far as no matter what the political climate is, I would go to an asset class that is an essential asset class. And I see that even now in my work, the funds that are crushing it right now are our essential funds. And I think it's for that exact reason, because everything is uncertain right now, but you can always bank on people needing groceries and people needing a place to live.
Yeah. Yeah, totally. Yeah. Multifamily, it's recession resilient because people always, like you said, need a place to stay. Anchored retail facilities as well, like you said, because grocery stores, the Home Depots, those major shopping centers where, regardless of the economy, people are going to have to go to. Definitely. What's your take on the future of real estate credit markets, especially with the current interest rate conditions?
I think, and it's been a while since I sat on the credit desk, but I feel like the future of the credit markets is sort of uncertain right now. When I first got on the credit desk in 2023, it was like, all right, we're probably going to be higher for longer. And then it was like, okay, we're going to be higher for a little bit longer. And then it's sort of like, maybe for a week or two, it was like, oh, there might be cuts. And then it was back to, we're higher for longer, and people are like ready to invest, because it's like, all right, we're not going to really get that many basis points off a year from now than what we have now. One of the theories that me and my friends have been talking about, and that I've been seeing in the news, is that, hey, with the economy doing so bad, like with the stock market being down this past week, while at the same time the bond market is down this past week, that could be a recipe, if that lasts long enough and we actually do end up going into a recession, 2 consecutive quarters of a negative downturn in GDP, then we could see some rate cuts. And because I'm not on the credit desk, I can't really speak to what investors are saying, or like what we're saying on the credit desk, as far as like predicting if those rate cuts will occur. And you predict it by, you get what's called like a SOFR curve. Just for the audience, you get a SOFR curve, and you can see what the market is pricing in down the line. I haven't looked at any SOFR curves lately, but I would imagine that it starts creeping in. If that narrative becomes more prevalent over the next couple of weeks, you might start seeing people liking the idea that the rates could go down in the near future. And how that helps, from my perspective, me being, if I were still on the credit desk, it would help the sponsors, because we get loans from warehouse and lever a lot of our deals. And so that means if we're doing a 250 point basis spread on a deal, so say we get a loan from warehouse of 50 million at 3%, and then we mark it up and loan that same money out at 5.5%, and we make that 250 spread. If they drop to 150 and we still make that 250 on there, now that's 4 that they're getting, when it was 100 or 150 higher at 5.5. So it will be better, because you will see a lot more people doing deals in the market. So yeah, that's how it will work. That might be too in the weeds, but yeah, I'm not on the credit desk right now, so I don't have a definite answer, but that's just what I could see potentially happening if things keep going like how they're going.
All right, understood. So you founded Blue Magnet to mentor Naval Academy grads. What was the spark for that idea, and how are you scaling it?
Yeah, so the spark for that idea was honestly, for background, when you graduate an academy, the typical length of service commitment is 5 years. if you go down a route where you have to go to school again, so if you go like nuke SWO or submarines or pilot, then you have to go to school, and that adds on. But most people have a 5-year commitment. And so it was 2025. I graduated in 2020. At the time, it was 2024. And a lot of my classmates were reaching out to me asking, hey, can we get some insight as to how you transitioned, how that process went, how you found the job that you're now with, like the whole gambit of questions, just trying to see, hey, do I actually want to get out or do I want to stay in? And most of the time, I was connecting them with some of my mentors, some of the people that I've met over the past couple of years that I've been here in the city. And it was just taking up a lot of time because I'm an analyst at that point, like a brand new analyst, and it's only so much time you can give to people. But I've never been a person that likes to say no when there's a way to say yes. I always look for a way to try to say yes. And so I was like, all right, I'll just put my mentors and my network of people that I feel like are really smart, talented, genuine people onto a platform where all of these academy grads can go and connect with through me. But at the same time, I don't have to be the one connecting you guys. You can just go here. It's for you. And to be clear, it's not a business in the sense of scaling. I think right now it's doing exactly what it's supposed to be doing. And I don't make any money off of it. The people on it don't make any money off of it. We're not selling anything. It's literally just a guy who came home on the weekends for like a month or two and put together a website and said, hey, XYZ person, would you like to help veterans? And that person said yes. And I put them on there. They put their contact information and they help out. So it's a good thing to be helping veterans. I really like mentoring, and I do mentor with the company that I internship with as well. Academy Securities on a monthly intern or a monthly mentorship call with them that's open to all veterans looking to get into finance. And it's just a lot of fulfillment that I get from that. So, yeah, it's good. I love it.
Okay. Yeah. After this interview, I'm going to go in my backyard, get in the Wayback Machine and go back 20 years so I can apply for this blue magnet, because that was my dream, to be on Wall Street, man. That was always the goal, to be on Wall Street, but it is what it is. But no, that's a great program, and I'm happy that you had the foresight to do that, especially with people, like you said, pinging you for answers on how you were able to make that transition. And so now they have that platform to be able to get those answers and resources for themselves. Mm-hmm. And that's huge.
Yeah. It's a very spooky process transitioning out. It's really scary leaving something that's stable and as predictable as the military. The military gets a lot of flack. It's kind of funny in the military. People complain a lot on the day-to-day, but like low key, you love it. And that's what I found. And so it's hard to walk away from it, even though you go to work, you're like, man, I got to do this again today or whatever. So yeah, it's the whole goal is just to give people more insight so that they can make a better informed decision and feel better in their decision and not feel like they're making a decision out of fear.
Yeah. So in your role with Vroombrick, how do you approach strategic growth and investor engagement for a startup environment compared to a large asset management firm? And then and also define what who Vroombrick is for our listeners.
Yeah, so basically Vroombrick is like the TurboTax of real estate. It's a company founded by one of my best friend, Leland Ramirez, very smart guy, was a surface warfare officer, graduated from Virginia Tech. He was one of the 4 guys on that initial Sotheby's team that I mentioned earlier in the podcast. And he's always had the goal of making real estate more affordable and accessible to a broader group of people, mainly veterans. But I mean, anyone can use Vroombrick. You don't have to be a veteran. But essentially, it walks you through the for sale by owner, or I don't know what saying they have for buyers, but basically you can sell and buy real estate completely online without a broker. So cutting broker fees, and on average, the typical transaction, they save about $10,000. Basically, Leland's a really great friend of mine, even before Vroombrick. And what I do there is basically advise on marketing materials, as far as like looking them over, giving them insights or potential strategies as to go to market, or what people are currently seeing, or introducing them to people in my network, just things like that to try to help them out, because I do believe in Leland's goal and his mission to make real estate more accessible to a broader group of people, because it's a way to build wealth and financial freedom. So that's a message and a mission that I can get behind, and he's my really good friend. So that's pretty much what I do for Vroombrick.
Okay, great. So you coach track and field at New York University and mentor veterans through Academy Securities. Why is mentorship such a consistent theme in your journey?
The reason, my parents never told me what I could and couldn't do. They just always provided their perspective and advice. And I find that a lot of people respond positively to that, especially the older you get and you become an adult and have kids and have more experiences, and have other responsibilities. You don't want someone telling you like, hey, this is the only way that you can succeed, or like you should do this the exact way that I did this. I just think that everybody's situation is very nuanced and it's different. So I think that me helping other people in a way that I want to be helped brings me great fulfillment. I think my parents modeled that really well for me growing up. We helped the community out in a lot of ways, probably more ways than I even know, because I was a kid at the time, but they're just so active and ingrained in whatever community that they move to, and always looking to help the next person has led me to sort of take on more formal mentorship roles. Because I think pretty much everyone is a mentor in some right, even if they don't know that they're a mentor. They're guiding or affecting someone's decisions. Often seeing my reaction when I do have the opportunities to help other people is why I like it.
So for service members transitioning into civilian careers, especially finance or real estate, what are the biggest mindset shifts they need to make?
Going in and bringing it up every 5 seconds, or saying like, well, in the military, this is how we did it. Or when I was doing this is how we did it. That'll get old very quickly. So I would say that that's a big mindset shift. They don't understand the gravity of ranks. So you saying whatever rank you were, or like saying, hey, this is why you should listen to me, and then justifying it with the rank in the military. It's just, I would say like, leave your rank at the door and respect the industry. I would just come to those situations with the mindset of, hey, I'm here to learn. I'm here to provide value, but I am not here to sort of show how great I am from the standpoint of like, well, yeah, I'm better than this other analyst that I'm sitting next to, because this guy just graduated college a couple of years ago while I was out leading sailors. You know what I'm saying? Is that can get misinterpreted. It can come off in a different way that you intend it to be. So I would say that that's one way that you should shift your mindset. Just approach it with a humbleness, but then also you should also approach it with a more free mindset. And not speaking for every organization, but a lot of organizations aren't as rigid as the military. There isn't a set guide on how to do everything. So you can approach problems and situations with a first principles mindset of like, all right, I did do this in the military. We can take this process that's happening over here and sort of break it all down and reconstruct it, and I can present it this way. And I think that's how you get across your military experience in a very good way and productive way, that people will be like, okay, like this is all the hype that they're talking about with veterans. So just thinking of things from a first principles mindset, and not just doing things in that organization the way that they've been done for the last 50 years just because they've been done that way.
Okay. So what advice do you have for veterans who are interested in breaking into private equity or asset management?
My advice would be to always be working on your skill set, whatever sort of sector of private equity that you want to go into. For commercial real estate, I would suggest that you know what a fund is, know what a syndication is, know how you make money in real estate from a very high level. Yeah, I would say know all those things, and then network. The whole reason that I'm in the position that I'm in now is through my network, just maintaining good relationships and being a good person. Like we said multiple times throughout the podcast, real estate is a lot about relationships, as is a lot of industries, is about relationships. So just being a good person, not being afraid to be the person who who reaches out to other people to check in on them, not being afraid to go out of your way to help someone else or find that way to say yes to someone when you could easily say no, because everyone's busy. Everyone has something that they could rather be doing. Making time for people, being on time, just doing all the things to like try to be the best version of you possible. Someone will see that and an opportunity will present itself. If you're constantly doing things that sharpen your knowledge and skills in real estate, and then also just being a good person and putting yourself out there, an opportunity will present itself at some point. Private equity is one of those industries that is sort of a closed curtain industry where you don't have job openings for every position. I can't remember the last time I've seen a job opening for the company that I work with, yet we have hires here and there. So it's just like, I didn't get hired through a job posting. I got hired because I started talking with a woman who knew the guy who owned the company, and being a good person in those interactions, not even asking for a job, but through those interactions, hey, Cedric, we like you. We want you to fly out here and we want you to take a position with our companies. So yeah, that's the advice that I would give. Like, be patient, be a good person. Above all else, be a good person, and then sharpen your skill set. And then one last thing, which is a cherry on top, and this is company dependent, knowing how that company positions themselves in the market and knowing how they make money and what were their most recent deals. Knowing those three things going into a conversation with someone at that company will instantly make you stand out. And it's just like someone coming into an interview and they know everything about you and they're like, man, I'm your biggest fan. Like, that thing that you did last weekend, that really wasn't that crazy of a thing. Wow, it's like really crazy. And I really like you for it. It's going to be hard to dislike that person. So it's the same thing when you're talking to companies. Going back to the institutional investors being human, companies are human as well. And they like it when people notice the things that they're doing, because people work very hard to make those things possible. So if you know how they like to be seen in the market, know how they make money, and know their recent history as far as like big deals and big accomplishments, you'll stand out a lot.
Well, Cedric, it has been a blast having you as our guest today and really giving our listeners a high-level view of what private equity and commercial real estate is like. So as we close out, please tell our listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now.
Yeah, so you can get in touch with me at LinkedIn, just Cedric Williams II on LinkedIn. Right now, if you are someone who would love giving back to current service members who are thinking about transitioning out, are transitioning out, or have transitioned and looking to get into various industries, not just private equity or finance, reach out to me on LinkedIn and we can talk and hopefully get you on Blue Magnet to help out some service members. Outside of that, it's been a pleasure to be on the podcast today. Thanks for having me.
Awesome, Cedric. Again, I want to thank you for your time today and all the wisdom you have provided to my listeners. It's greatly appreciated. And I want to thank you, our fans, for tuning into the Service to Syndication podcast, where we want to add value to you in your investing business. Please tune in to our next episode where we will interview another fantastic investing professional. See you next time. Thanks for listening to the Service to Syndication podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.